Let me welcome on board our chartists as well. Kunal Bothra, we have Andrew Holland, Nirav Chheda as well joining in to talk about their market perspective. But Kunal, let me come to you first. Some more consolidation. We're now sub the 21K mark. Weekly expiry as well tomorrow. What do you foresee on the cards for the index?
So even if it's 70 point, 80 point down for the Nifty and 100 odd point for the Bank Nifty, but I think we've seen good recovery for many of the stocks within the individual pockets today on an intraday basis. So that indicates that we could be probably getting into a bit of a drift on the indices where we may expect few more days of consolidation. So expecting 20,700, 725 as a near-term support for the Nifty. So maybe another 100 points over the next couple of days is what I would expect for the Nifty on the downside. But on the other hand, I would believe that there are a lot many sectors as well as stocks which are showing signs of a breakout yet again. Today the chemical stocks are looking very attractive. Many of the chemical names have shown signs of a breakout. So I think it's best to try and concentrate into individual stocks or sectors at a point when the market or the benchmark indices look to be drifting into a bit of a range.
Okay, market is in a bit of a range, so fine for those big momentum based stocks. But Nirav, what's your view on the IT pack? Very clear weakness across the board today. What would you suggest investors do?
Yeah, hi everyone. There is weakness in the IT pack as a whole, but this weakness is only near term. A lot of good buying has gone in, especially in these stocks. Some of the stocks are actually broken out above their resistance zones and now are retesting the breaking out levels. So I don't think this selling is here to stay. I do believe probably in the session tomorrow is where they'll make their lows and then start to move up again. So for the likes of TCS, there is a very good support area around that 35-50 odd levels, or for that matter, an Infosys where it has come back to its support area, which is around that 1450, 1440 odd level. So, caps have come there. I'm seeing good traction, good buying in the last couple of months in these stocks. So the buying is likely to continue. They're at good support areas. So buy tomorrow. And probably, in the next few days, you will see a good momentum going forward. If you are holding on to positions, I don't think there is much to worry about at this point of time. You can continue to hold.
Welcome on board, Andrew Holland as well. Andrew, hi, afternoon. Just wondering whether the Santa Claus rally came in a little early and for the month or for the year, in fact, is the best now behind us.
No, I don't think the best is behind us. I mean, maybe for between now and Christmas Day, it might be behind us. I think there's going to be some consolidation. But listen, I think a lot depends on what the Fed says tonight, because, the data more recently on jobs and inflation has really not given that, that kind of confidence that, the Fed is going to be as quick as the market is expecting in terms of interest rates falling. So if it's a little bit more dovish, that would be the extra kind of move that you could see the index move higher. But I think between now and the first quarter of 2024, I think there's probably another 5% upward move for this market ahead of going into the general election. So I think that's not a bad outcome from where we are today. But a bit period of consolidation is not a bad thing. We're noticing that with all these kind of block deals and QIPs that the kind of prices and are not giving you a big kind of push up in following on from the issuance. So I think the market's a little bit tired at the moment in terms of a lot of stock coming onto the markets, a lot of IPOs coming in the next 6 days. So not surprised that we're seeing this consolidation at this point, but say going into the first quarter of next year, I think there's probably another 5% upside.
5% upside in the next quarter and not yet near the peak at all, at least not in the medium term. That's the view coming in. Time now to slip into a very short break, but don't go anywhere. We have a whole host of discussion and stock-specific questions lined up for a battery of guests on the other side.
Back with closing trades right here on ET Now, and IFC, or the International Finance Corporation, has announced top financial institutions for climate reporting in 2023. India's Federal Bank has emerged as a leading name with the bank winning 2 awards in the Global Reporting and 4 awards in the South Asia category in various categories. In fact, Federal Bank won in the most transactions reported, highest climate loan amount reported, most GHG mitigated, and best achievement versus climate targets awards as well. IFC, in fact, is the largest global development institution focused on the private sector in emerging markets. In the fiscal year 2023, IFC committed a record $43.7 billion to private companies and financial institutions in developing countries. But back to the markets right now, still in consolidation mode at an index level. Power Finance is holding up. NMDC, HPCL, TVS Motors are all looking extremely smart as well. Andrew, that's the other opinion that I wanted to get from you, right? Because in light of Ola Electric's impending IPO, you're seeing TVS Motors and some of the other two-wheeler majors as well getting a little bit charged up. I would say the neck-and-neck comparison comes closest to TVS, which in any case has had great past performance. Wanted to understand, how do you think this entire EV two-wheeler space is going to pan out and shape up in the years to come?
Yeah, it's a nice fillip for the stocks today, isn't it? I mean, when the IPO is coming, it's difficult to say, but I think the market was looking for some excuse to push the two-wheelers higher, and that's what they got. I wouldn't really be chasing it on this type of news. There's a lot to happen in this in kind of the EV kind of evolution going forward, and so whilst the names that you mentioned are going to continue to do well, I think the market cap which the market is trying to kind of put onto it in terms of the potential Ola IPO listing has to be kind of seen first. So I'm a little bit skeptical on this. I wouldn't be chasing these kind of stocks on this news alone, which I think that what the market is doing at the moment.
So that's the latest. But in terms of the few buzzers, you have Tanla Solutions, which is up 17%. Schneider is up around 12%. PTC Industries a 10% gain, and JMR Infrastructure, we should pull up the 5-day chart. Since that entire news regarding GQG picking up stake, that stock has been definitely on fire. JMR Infrastructure is the stock that I'm talking about. JMR Airports is the listed name. So that stock will definitely come up, and that's seeing quite a bit of movement. In fact, if you pull up the 5-day chart, that will tell you that the stock has gained almost 25%. Andrew, what's the verdict on this entire affluent spend that we have been seeing? In fact, we were just speaking with the management of SpiceJet as well, and he was talking about how the next wave of demand is going to come from tier 2, tier 3 cities and people who haven't probably traveled even once. And this entire need of improving their lifestyle is something which is quite visible across the board. Do you think this is something that could drive consumption? And if yes, which stock sector should one bet on to play this?
I mean, I saw the interview as well, and I think it's absolutely right. I mean, I think whenever you get to per capita GDP of $2,500, your aspirations start moving. I mean, from buying the kind of normal TVs and fridges and so forth and so on to experiences, and travel's one of them. So I think the whole travel industry has including hotels, have got many years of good growth to come through, and of course we can see that in the results and the margins from the hotel sector in the previous few quarters. So that will continue. So I think this whole sector of kind of whether it's kind of moving up kind of in terms of premiumization, and I put that back, and we talked about this theme before. Is beverages as well, where I see both non-alcoholic and alcoholic beverages in terms of premiumization. Young people wanted to try higher end brands will be something that's continuous. So you're really at and not to use an analogy here, but you're really at the beginning of a runway here for the whole kind of movement towards luxury goods and experiences, and I think that's what the market should be pricing in, and will continue to price in over the next 2 to 3 years.
Kunal, let's get in your perspective here, because I recall a while back, Radhika Khaitan was one of your top ideas, right? What next within the liquor space?
Yeah, so I think now UBL is making a comeback for itself. That stock has made a fresh, I think, multi-week, multi-month high. United Spirits has been doing well. I think from the time when the stock had broken past about the 900, 960 odd mark, from there it's moved into a very positive kind of a momentum, even though it's been a huge underperformer when you look at this in the 3-year, three and a half odd year context with the rally for the liquor stocks. Global Spirits had earlier been a strong mover, but that stock has been a bit more volatile off late. So no major signs in terms of the trends emerging for the stock. So as of now, I would concentrate on Radico. That's a stock which I think at 1600, 1700 looks attractive. UBL is something at 1700 plus mark, which is also confirmed a breakout.
Okay, so that's about the alcobev industry, but talking about the hotel sector and the hospitality space, we did speak with the management of Indian Hotels. Listen in to what Mr. Puneet Chatwal had to say.
The industry is in an upcycle and the rates are increasing because the occupancies are running in most of the important locations at close to 80%, whether it's high 70s or early 80s, like in Goa, like in Mumbai. So I think all in all, the demand continues to outpace supply. I see no reason of that slowing down because suddenly the supply side cannot come in with a lot of new supply. So the fundamentals are good. And what the sector has done is it has been able to streamline costs when the revenues went to zero during the COVID time. So I think all in all, good outlook for the sector.
Okay, so the margins are likely to inflate given the amount that we are paying as consumers is quite high and you've managed to restrict the cost. But talk to me about just that. Are you willing to pass on some of those benefits to the consumers? Because if I look at the rates right now, they're of course exorbitant, and Prime Minister has been talking about how you should travel within the country, have weddings within the country. How do you marry the two together?
I think more than the rates, you should look for the value relationship, and I think the value that is offered in hospitality and services across Asia in general and India in particular is possibly the highest. The guest is God is something which has been coined here in India, and for a long time the consumers have benefited from very, very low rates, which was also unrealistic. So hopefully the re-rating or the resetting of rates at a level which is still lower than comparable cities. So you all.
With this round of funding, we expect to come out of these problems and set ourselves on a growth path again.
Currently, what is the fleet size, and in terms of revival of the aircraft, in terms of the fleet or the aircraft that you are looking to get in from Boeing, can you share some more details on that?
We are flying 40 aircraft at the moment.
Okay.
We expect to enhance that significantly. We are working on the plan, so I can't tell.
Okay.
I can't say exactly how many, but we will certainly try and double our fleet over the next 12 to 18 months. Now, some of these are aircraft which are grounded, which we will be putting back into service. Some of these are aircraft that we will be taking on lease. And some of these are, deliveries that we expect to get from OEMs. So we are quite confident that over the next 12 to 18 months, we will at least double where we are today.
Tough time that you have been going through, especially during the COVID period. But that was a time, and post the COVID period, you lost a significant market. You lost some routes, also the kind of problem that you're facing. So in terms of market share, how you plan to regain it? How you plan to
market share is a function of the number of aircraft that you're flying. As soon as we enhance the market, as soon as we enhance the fleet, you will see an increase in market share. So one needn't be overly concerned about market share. It comes back.